Welcome back, everybody, to StockTwitsTV. The markets are processing a huge amount of Trump at Davos energy. The Alps are freezing, Meghan King, but the commodity trade is on fire. We're also going to talk about Fed Watch, and joining us now to break it all down is the economic muse herself, Meghan King. How is Europe? You're in London. How is Europe processing the speech by Trump at the World Economic Forum? He didn't hold back, did he?
No, it's been very interesting to watch. I feel like a lot of people took relief and comfort in the assurance that there wouldn't be military action. But it's been interesting to watch Europe responding to these tariff threats, 10% to rising to 25%,
Right.
and kind of the use of Greenland's diplomacy as an economic lever. I think,
Yeah.
We've seen the European Commission president and other US and other EU leaders, warning that this risks undermining long-standing alliances between the US and Europe.
Yeah, I mean, that's the thing. Like, he keeps framing Greenland as this national security asset. We should say that Greenland is part of NATO. So technically, the United States is obligated to protect Greenland already. But he has taken force off the table. I feel like that was a huge, you referenced it, sigh of relief if you are in the EU, if you are in NATO, but he's still using the checkbook as a hammer here. And we're seeing a little bit of a safe haven bid in the markets as a result. What are you seeing? What stands out to you?
Yeah, absolutely. I mean, markets have noticed equity benchmarks across Europe and the US have been pressured by this new tension rhetoric, and investors are repricing risk on foreign policy uncertainty. We are seeing sector rotation into commodities. Commodity markets are among the first, often, to price in this geopolitical shock and structural demand shifts. And then, of course, Mother Nature herself, we have this Arctic cold coming across the US that's putting pressure on natural gas. There's the trade play and looking at gas as an investment versus the real demand for literal heating during this extended freeze.
Yeah, right. The Arctic freeze that you're talking about there, it's not just a weather story, it's a supply chain shock. And I can speak from experience, the Arctic freeze is very real in at least the part of the country where I am, the middle of the country. And the Trump trade here is nuclear and oil, right? He hates renewables. He doesn't like solar. We already know he's got a vendetta against windmills. What are some of the tickers that are catching a bid on Trump being so adamant about unleashing American power?
Yeah, I mean, natural gas prices.
Natural gas.
Nearly 20% among the, geopolitical tension, but real demand for extended heating in the face of this freeze. And, you mentioned commodities, precious metals, gold and silver are set to hit somewhat of a psychological benchmark. Gold potentially reaching $5,000 and silver at $100. These markets are being driven both by safe haven demand and real industrial tightness. And, these are psychological targets more than anything else. I think in this time when we have a combination of policy uncertainty and these pressures that are climate induced, these allocations are somewhat of a ploy for economic resilience and readiness.
Yeah, and speaking to the geopolitical risk that we started out the show with, when you have the president of the United States threatening to take over islands or annexing islands, essentially threatening NATO, people are really trying to buy physical assets, right? People are getting into gold. People are getting in. I remember when $100 silver was a meme, and now it's very much a price target, right? As far as, leaving that aside for a second and going to monetary policy and sort of talking in a macro way here, There is no white smoke yet on the next Fed chair. There's a lot of speculation on who it might be. The markets hate uncertainty, but it seems like Trump is obviously targeting someone who's very high growth, very low rate hawkish. How do you think the markets are sort of digesting this waiting game for the new Fed chair?
Yeah, I think the guidance that came out of Davos was reassuring for investors. Treasury officials gave some guidance on the time frame around when we would know about the next Fed chair. They've been careful to attempt to underscore some of the uncertainty. Treasury Secretary Scott Bessent confirmed today that Trump hasn't decided yet, but that a final decision could come as soon as next week. And I think this is so significant at this moment in time because this is not just the identity of the Fed or the Fed chair, but more the philosophy and whether they'll prioritize inflation control, growth within the US, or the financial markets. And with geopolitical shocks and inflation still in play, the Fed's stance will matter for risk assets, rates, and yields alike.
Yeah. So we'll wait on the Fed chair, but again, in that speech in Davos, finds the time to say that Jay Powell is not doing a very good job. So we're obviously going to move on. His tenure is over in May, and the White House is making plans for the next person. Let's talk a little bit here about some individual movers in the stock market. Netflix giving those investors a little bit of a headache. I jumped into the Netflix stream, and one of the first comments I saw from the StockTwits community was, "Who is running this company?" Their investors are not very happy with the Warner acquisition, despite a good headline here, right? They beat on revenue, but Meghan, we're seeing the stock down 5%.
Yeah. I mean, that's the interesting thing about these subscription and streaming models is surely there's a point in time at which it simply cannot grow any further. There's not going to be more, it's not a market that can grow when,
right.
It was such a limited market to begin with. I think shares are under pressure. Their earnings exposed some margin strain and slowing growth. Over on Retail Edge, when you discussed it with Tom, I think it is coming off such a run that, something did have to change. And I think this, slowing growth has prompted analysts to cut their price targets. Reports have suggested that they are testing short form video across mobile.
Like TikTok.
Yeah, which is interesting because it goes beyond just a product tweak. It's more of an admission and a statement that attention to content or media is now the commodity as opposed to the media or the content itself. And, attention is the most coveted resource when there is an infinite amount of content to consume and places to consume it from.
Yeah, I mean, I think that's one of the reasons that we've seen sports become essentially the center of the entertainment universe, is because those athletes are so adept at capturing attention. They have huge follower counts, and we live in an attention economy. Speaking of attention economy, one guy who's very good at getting it, I think, is Ryan Cohen. He's the CEO of GameStop. He just bought 500,000 shares, I think, in the open market, around $21 a share. Now, this is a put your money where your mouth is move, right? Do you think there's still meat on the bone here for GameStop? Do you see value? He does.
Yeah, I mean, it signals a ton of downside confidence from the company's most influential shareholder. I think open market buy-in still carries a ton of weight, particularly in a stock where the narrative or how it's being discussed in the media somewhat overrides the fundamentals. It's interesting how the sentiment around a stock or around the market is what drives it beyond the fundamentals themselves so much of the time. And I think this is a great example.
Yeah, yeah, and he's got a new incentive, a new deal laden with incentives where his compensation is directly tied to how this company does and certainly how that stock does as well. Interesting move here from Berkshire. You know, we're no longer in the Warren Buffett era. We are in the Greg Abel era. He's the new CEO of Berkshire. And he's doing something that you very rarely see, I think, in corporate culture. He's admitting a mistake. He's admitting, you know what? We didn't do as well as we thought we would in the Kraft Heinz with the Kraft Heinz deal. What's going on there?
Yeah, I mean, preparing to exit their 28% stake draws a line under one of Warren Buffett's few widely acknowledged mistakes. I think this reflects the new CEO's desire to simplify, refocus capital allocation rather than holding on to those legacy positions. And I think for investors, it's a message somewhat that even the best investors make mistakes, and knowing when to cut your losses is a part of long-term discipline.
Yeah. Now, I should say, you know, I kind of prefaced your question with, oh, we never hear corporations or executives say that they made a mistake. To be fair, Warren Buffett has made very few investing mistakes over the course of his very long career as the head of Berkshire Hathaway. But this is one of them, and they're ripping the Band-Aid off. And then finally here, as far as individual movers, we've got Lemonade. I think this is so interesting because we were just at CES in Las Vegas at the beginning of the month. I know we talked about it on this show. We've talked about it on other shows as well. Autonomous driving, our users love it. Retail loves it. It's going to be a hot topic in 2026 as well. And this is an AI insurance play. It's really interesting.
It is interesting. I think, unveiling this autonomous car insurance, some premiums, it's a direct bet that software-driven risk assessment can disrupt these traditional actuarial models. And I think if AI can accurately price risk dynamically, insurers who fail to adapt and to adopt the new technologies will see their margins eroded significantly. I think that the takeaway from, each of these individual stocks that we've discussed is, from streaming to insurance to professional capital allocation, companies are being forced to adapt at the moment. And sometimes that's a little bit awkward at first. These shifts in technology behavior and accountability, for investors, insider actions and these strategic pivots often speak louder than the earnings headlines.
Yeah. And speaking of earnings, we do have a lot of earnings coming out. Next week is kind of the many big companies, and we've got the Mag 7 coming out next week. But what stands out to you this week in terms of earnings and sort of themes for traders here?
Yeah, I think, we're looking at Johnson & Johnson, where investors are focusing on pharma pipeline growth, litigation provisioning. I feel like there's a lot of litigation consideration going on with Halliburton, a read-through on global energy capex discipline, particularly across North America versus more international margins. Ally Financial, we're looking at credit quality, auto loan delinquencies, more somewhat than revenue growth. Charles Schwab, net interest margin stability and client cash sorting are somewhat the key variables there. I think after hours watch, we're obviously looking at Kinder Morgan and cash flow stability, dividend coverage in this volatile energy environment. I think it's interesting to consider funding in this earnings season and how capital raising activity is reminding many investors that liquidity is a differentiator at the moment. And while this earnings cycle is going to test whether the strength on the balance sheet and pricing power can offset a slowed season of growth.
Yeah. Yeah. I think whenever there's market volatility, there will be companies who are going to be looking to get cash, right? And we're seeing that from a company like Saidu.
Yeah, I mean it's a defensible play at the moment to have cash on hand and be able to weather the volatility that's coming ahead, because nobody really knows what that looks like. I mean, that's the interesting thing with this administration being so communicative in a way. When we talk about the attention economy, the use of social media to get across thoughts in policy, it causes market volatility because, as we know and as we monitor on StockTwits, sentiment drives behavior.
Yeah, exactly. And that's why our community is so valuable, because we can give you real-time checks on what sentiment is for any number of asset classes and any number of tickers here. So in our final 60 seconds, Meghan, what's one thing the StockTwits community should keep on their watch list for the next 48 hours? We talked about a lot in this show, and the safe haven trade in particular. But I just wanted to throw it out there in general. What should they have on their watch list?
Well, I am watching gold and silver. I think in this moment in time where there is so much geopolitical tension, this movement into safe havens has been really interesting to watch. I got a reminder of a piece that I made a year ago talking about gold as a safe haven investment, and it was at like $2,500. And the fact that we've almost doubled is crazy. This policy uncertainty, climate and industrial induced pressure. I think these allocations into gold and silver are moving from historical hedges to more of a strategic allocation during this systemic risk repricing. And when we look at what's going on with like Bitcoin, other crypto assets, even bond prices, like it's a reconsideration of what actually is a safe haven asset.
Yeah. Oh, that's so interesting. I mean, and it's a physical asset. It is gold. It is silver. It is not Bitcoin, which is down something like 30% from its highs. Watch the cash tag. I believe it's SLV and cash tag PSLV volume on that. Good watch list. Meghan King, the economic muse. You can find her on Instagram and TikTok. Thanks for the breakdown.
Yeah, thanks for having me.